Hello, Matt Weaver here, and if you are an existing homeowner, please listen to this message. Okay, so there has not been a cure as of yet for the coronavirus, which in turn, the stock market continues to shuffle down. All that means, folks, is mortgage rates follow suit typically, and they are, meaning they're coming down further and further. We are at historic lows, no doubt about it. All right, let's get back to being an existing homeowner. If you're not in your ideal home, meaning if this home is not your perfect home for the next few years, be it 2 years, 5 years, 10 years, listen please very carefully. Now is the ripe time to sell high and borrow low. Let me repeat that. Sell high and borrow low. It's typically right now a seller's market, depending on market, of course, because of inventories being so low, which allows you to get maximum sale price. Couple that with where interest rates are today being at an all-time low. What I do at our smart home buyer events, which are now the highest attended home buyer events on a weekly basis all throughout Palm Beach County, is we go over carefully with the existing homeowners in the room a 5-step simple exercise to see if you can purchase, in fact, your ideal home. And I'm going to do that right now. Step number 1 we have here, get the value of your home. Now, folks, you heard it from me. Zillow cannot get you the value. Your real estate agent knows what the value is and knows what the market will pay. They're in the trenches. They do it every day. And here's the best part. It's free. They're going to give you what's called a CMA, a comparative market analysis. Go to them, get that from them, and that's going to be, of course, the value, what you can sell the home for. Number 2, we must calculate the cost of selling. There's going to be cost for selling. Think about it. There's going to be commissions, of course, and there's going to be other closing costs. So we calculate the cost of selling. Step number 3, what do you currently owe on your mortgage if you, in fact, have a mortgage? Step number 3, what do you owe on your mortgage if, in fact, you have a mortgage? Think about this. We have now found out our value, step 1. We have now calculated the cost of selling, step 2. We now take in how much we owe on our mortgage. We deduct from the value the cost of selling. We deduct how much we owe on our mortgage, and that gives us number 4, our equity position. What is that number? And that is the number that we really need to finalize this simple exercise. So once we understand what the equity position is, the last question, which is step number 5, which is the golden question, where do you envision and where do you want your total monthly mortgage payment to be? Where is that? Is it $3,000? Is it $4,000? This is including taxes and insurance, of course. That's the 5-step simple exercise. Now, follow me on this. A good rule of thumb to use when borrowing money, including principal, interest, taxes, and insurance overall, assuming it's not in a country club or what have you, is about $750 for every $100,000 you borrow. So let's go back to the simple exercise. Let's assume for a second someone has $100,000 in equity. And let's assume for a second their maximum monthly payment budget, they want to be at $3,000. Okay, well then that would mean we would look at a $500,000 sale price because we would put down $100,000, borrowing $400,000. And borrowing $400,000 at $750 for every $100,000 would be $3,000 a month. Complete the simple exercise to see if you can upgrade. Now is the time to do it. If it's not your ideal home, sell high, borrow low. It's an ideal time. We're available for you anytime, 7 days a week, 8 a.m. to 9 p.m. at 561-864-2458. Please give us a call. We can go over the numbers with you and help you out. And remember, contact the agent that perhaps shared this video with you, and find out what the value is. It's free. Hope to talk to you soon.